The report is our CPA-style, number-intensive document that outlines everything in the plan. Once we've input our incomes, expenses, investments, any kind of assets that we have, and applied the appropriate recommends, we're ready to view the report. So on the top bar, click Generate Report. If you have supplied us with your company's artwork and a logo, you should see that on the cover page. The first data page is the client summary. This is a snapshot of all of the client's assets, both liquid and illiquid, along with any liabilities on those assets. The second page of the client summary details tax rates that were used and itemizes each investment account. If static returns were used for these accounts, they will be displayed, and if market dynamics were used, the time period in which returns were calculated will be shown. Following that is the cash flow analysis in graph form. This will display all of the years in which income needs were met by plotting provided cash flow versus required cash flow. As well, the distribution order of assets is shown to the left. On the next page down, you can see again the cash flow provided versus required in dollar figures. If a shortfall occurs, the amount short will be in the far right column. After that is the after-tax annual cash flow chart. This outlines all cash flow, both required and provided. Provided income is broken down by source, whether it be pension, taxable, tax-free, tax-deferred, or from an equity account. Excess cash flow is also displayed each year that it's available, so that should give you an idea of how much possible reinvestment the client can make. The following pages through after-tax desired income break down desired income in further detail. A list of each expense and the inflation rate associated with it will be shown, and the following will be a column formatted page of categories of expenses with a total sum each year in the rightmost column. The same goes for expected income details and after-tax expected income. The next part of the report is summary pages for assets and individual breakdowns of each asset account. If, for example, you only have one account that is taxable or one account that is a pension account, that asset will be broken down on a page titled Taxable Account or Pension Account. Anytime you have two pension accounts or more, or two tax-exempt accounts, for example, or more instead, you'll see a summary page for all those like assets, followed by a page for each individual asset with its own breakdown. In my example, I have multiple pension accounts and multiple tax-exempt accounts. So the first page down is the pension assets summary page. Account balances of each pension account is shown on the left side of the page as an annual breakdown. On the right side of the page, you'll notice after-tax pension income and exactly how much, if any, was withdrawn from each account each year to fulfill income needs. The following few pages break down each pension asset and include details such as deposits, RMD withdrawals, distributions, and beginning and year-end balances. In the pre-tax and after-tax column, you can see how much gross distribution were taken each year and what after-tax income was supplied. At the bottom of the page, you can see what growth rates and management fees were used for the account in creating these projections. If market dynamics was applied, you'll see the time period that was used for the S&P 500 historical returns. I just have one taxable account in my example, so there's just one page that outlines that asset, and it's titled Taxable Account with a subtitle Bank Savings. In any of the interest earned columns, capital growth, or even just by looking at starting and end balances from year to year, the change in value is going to be attributed to your returns from market dynamics, unless a static return is stated at the bottom of the page. A quick thing to note here is that if you perform any Roth conversions on these asset accounts using the recommends calculator, you should see the original asset showing an outflow and a new page showing where those outflows went that will be titled Tax-Free Account Roth IRA Converted. So even if you fully convert an IRA, for example, in year one, the asset page for that IRA is going to remain, and it will simply show 100% outflow in year one and all zeros after that. And as you scroll down, you will be able to find that asset again titled as a Roth, likely with a lower account balance due to paying taxes for the replacement of that IRA. After pension and liquid assets are the illiquid asset pages. What you're essentially going to see is the value of the asset year by year, followed by the value of the liabilities attached to those assets year by year on the following pages. Much like the other asset pages, assumed growth rates will be displayed at the bottom of the page for these illiquid assets, and the interest rates displayed on the bottom of the liabilities pages. Following that is the net worth statement that itemizes the value of each type of asset. If you look at illiquid assets, the value of it on this page will be the sum of the asset value minus the liabilities attached to it. Following that is the annual wealth transfer, which displays net wealth that would be transferred to heirs from years 1 to 40 if the client were to pass away at any time. For this reason, it's important to add in the federal estate tax exemption in the estate tax schedule on the main page. Below that is estate assets detail, charitable bequest details, and transfer tax details that goes along with transfer taxation of various assets. Generally, these last few pages will not mean a lot, as the majority of people won't have estates that are worth more than the federal exemption or have the means to make regular charitable bequests, whether for tax reasons or for personal reasons. But in some situations, and for some clients, it will matter greatly, and we want to cover your bases for those high net worth clients. If you recall, at the bottom of every asset menu, there is a schedule for charitable bequests from that asset, and if that was filled out, that information will be displayed in transfer tax details and charitable bequest details. Finally, there are a few disclosure pages about the means and methods used to create the plan. On the very last page is the plan delivery receipt that we urge you to have your client sign after receiving the plan. As a closing note, I would urge you to reach out to your account manager with specific questions about the report or any of the pages within. Since financial plans are so situational, we expect you to reach out to us with questions, and we are always more than happy to help.